Hi everybody, this is Rich with another version of our OWA Live. I wanted to present some information today that's a follow-up to the market update that I gave last week at the end of June pertaining to the direction of the economy and markets and bond yields and all that stuff that's going on. Today, which is actually Thursday of the week following, there was a report that came out from what's called the ADP report, which talked about labor rates, and the economy added 500,000 jobs last month. And that was a surprising number, nearly twice what was expected. So what does that number mean? You may have noticed this week that the markets have been choppy, I think in anticipation for something like this. And what this means for all of us, frankly, is that the Fed, which has been talking about interest rate hikes, that they were going to raise rates at least a couple more times this year, it's probably going to last longer. And so what's happened in the short term since that report was launched today is that the yields on bonds are up. So if you buy a bond yield, or a bond rather, those yields are averaging 5.5%. So they are up, they're increasing. So if you buy a 3, a 6, a 12-month US Treasury bond, you're going to get about 5.5%. So the yields are up and the stock market is down today. So at the end of the day, what does all this mean long-term for the markets? I would guess that the markets are going to be choppy for the rest of the year, trying to figure out the direction of where we're going, how long the Fed is going to keep raising rates. The one thing I think is certain is that Jerome Powell and the Fed that has been kind of floating the information out there in the economy that they may be raising rates further in the future to cool the economy. To me, it's pretty clear that they are going to do that, and it will likely continue to have increases through the rest of the year and likely into the beginning of 2024. So expect choppy markets, expect bond yields to remain favorable, at least short-term bonds, and expect the Fed to raise rates. So if you're thinking about that consumer loan, that car loan, that mortgage rate, expect those rates to be going up in the short term. So there you have it. I just wanted to give you an update from last week's market update. And until next time we meet, have a great day and a great week, and we'll talk to you soon.